So the last talk kind of led into tokenization and this topic. I think all of you are probably familiar with tokenization by now, but let's just, before digging a little deeper, if we could just kind of set the stage here of, it seems asset tokenization has really been talked about more and more, particularly in traditional financial circles as well as crypto native over the last year or two. So just kind of curious of what has led to that momentum in your view, that this has just been a topic that is on everyone's mind. Morgan, would you mind? Yeah.
Can you guys hear me? Yes. Hi, I'm Morgan Kropetsky. I lead institutional and capital markets business development for AvaLabs, which is the licensed service provider to the Avalanche Foundation, from which the Avalanche L1 was built. In terms of tokenization and kind of why the topic has kind of gained more momentum, I don't think that the topic is necessarily a new concept, but I think it's regained popularity and momentum, and hopefully will stick around this time more so than others probably for a few reasons. I think in the first instance, this time compared to last time, like in 2017, where you had a lot of like STO offerings, this time around you have a lot more kind of institutional grade infrastructure in place. You've had kind of rates in the real world going up and pure kind of on-chain DeFi yields going down. And so there's been kind of this focus on bringing real yield and real world assets on-chain, and really kind of diversifying a lot of the non-yield bearing stablecoin TVL that does exist on-chain. In addition, you've had kind of large Wall Street firms, buy side and sell side, the executives really touting the future as tokenization. And then you've had the advent of DeFi, which really has added another layer of kind of utility and composability to the tokens themselves. So I think between all those things, and you have actual major players in the space doing stuff, i.e. Citi, BNY, and others. So I think between all those reasons, I feel like this time is different.
Yeah, and I jumped into it a little fast, but if you other three could just introduce yourselves quickly as well, and when we could jump into the next question. John, you want to?
Well, I was going to say ladies first. Panel with a lot of ladies today.
Yeah, so. Talia and Nadine.
So Nadine Teichner, I work with Citi. I lead digital assets for the custody and fund services business. So I've been looking at this since 2017. I've seen a lot of change over that time and definitely agree with the statement that it's certainly shifting in the direction of tokenization, and there's quite a few reasons for that. I think in addition to what you said, Morgan, the technology has changed in that permissioned public blockchains are enabling financial institutions to come in. So it can provide more security, confidentiality around the security. So I think there are some fundamental issues. I think identity tokens will also unlock a lot of opportunity around that. And I think financial institutions are starting to look beyond using blockchain just to enable operational efficiency for transfer of cash, collateral, or repo, but starting to move into how they can issue assets digitally onto these networks to enable greater distribution and liquidity. And so we're starting to see a lot of those use cases being explored, and I think it's going beyond a proof of concept because I think we're making small steps to better understand what security token standards can be applied, but trying to move that into actual real commercial opportunities.
Got it.
Hi, everyone. Good afternoon. Thanks for sticking around for us. I am Talia Klein. I'm a product lead at BNYMellon for the digital assets business. I joined the bank about 3.5 years ago and led the product team for the digital asset custody launch last year, which was the first launch for a GSIB to support digital asset custody. So big effort on that. I think to answer the question around why this time is different, it's a hard question. I think there's a lot of different factors that Morgan and Nadine mentioned. I think when we think about the last couple of years, the digital asset space in general, I think, has pushed the traditional finance world to think about the way that we transfer value and if there are new and better ways potentially to do it, right? If you're just any human being, you sit with your phone and you can move money, or you think you can at least, in the 2 seconds, right? And when we look at the institutional space, we think about, are there more efficient ways that we can be moving value? And I think it's the digital assets like native ecosystem has pushed traditional finance to think about what do we do, how do we do it, and is there a better way to do it? And I think there's a lot of conviction in that. You see the highest ranks of lots of traditional financial institutions talking about digital assets. And I think that conviction has brought us all together, and it's really an opportunity for the ecosystem to collaborate. And I think historically at digital asset conferences over the last couple of years, it used to be this kind of, we're the TradFi. Actually, someone before asked me if I thought TradFi was an offensive term. We're the TradFi and we're the crypto people and never the two shall meet. And I think now over the last couple of years, what we've realized is there's really an opportunity for all of us to come together. And I think I know many people in this room, and I think many of you would agree that we're stronger together than we are in conflict with each other. So I think there's a big opportunity for us to accelerate the momentum together.
And I can stop saying TradFi if it's offensive. I don't know.
I don't think it's offensive.
No, I don't.
know if
I
anyone
don't
else
think it's
does,
offensive
but
either.
But John, I would love to hear from your perspective too of how you've kind of seen tokenization evolve over the last few years from where you sit.
For sure. So thanks, first off, for having me. John Patrick Mullin, CEO, co-founder of Mantra. We're a Cosmos-focused L1 building RWA infrastructure for the Cosmos ecosystem, particularly. We're definitely on the spectrum of financial institutions, the closest to crypto native and the smallest, considering the astute panelists that I'm sitting here with today. But we do have some crypto native experience and tokenization experience that I think is significant. I would actually take the other side of what Morgan was saying when it comes to kind of retail adoption of asset tokenization. And this has been being driven by regulatory frameworks that are actually being put in place in jurisdictions around the world, some more than others. We're actively engaging in regulatory processes, particularly in the UAE, which I think is a leader in this front, that are retail-friendly regulatory frameworks for actually being able to issue, manage, distribute, and trade assets, RWA assets. So I think these type of things are quite interesting when it comes to DeFi, because a lot of the on-chain users are not only institutions. I mean, they're degenerates like myself, who actually want to be able to get exposure to this. And when you're talking about on-chain asset infrastructure, you need to think of the crypto native user first, which is really, in my opinion, the core target market, and that's what we're going after. So really excited to unpack that with the lovely ladies here today.
Yeah, and we'd love to also kind of hear a little bit about talking about the banding together of traditional finance and crypto native. We saw Citi and AvaLabs do kind of a partnership, a proof of concept, where there was a tokenized private equity fund brought onto Avalanche's Spruce subnet. So just kind of curious, when something like that happens, what is going on behind the scenes? Who approaches who? And if you could just kind of discuss a little bit about that process.
I think you can take that.
Sure. So I think part of the success that we've had with traditional financial services institutions is a lot of us come from that space. Like I worked at Citi actually for 12 years. Our president, John Wu, came from the buy side. Our SVP of BD, Lydia Chu, sitting back there, also came from the buy side. So a lot of it is about kind of, there's definitely a technical component around talking to institutions and deep diving with them around, what is Avalanche, what are the capabilities, how can it provide like the best of both public blockchain infrastructure and development while enabling institutions to control their end-to-end blockchain environment and really enable kind of hybrid options for them, which didn't exist 6 years ago or before. But then there's a very big like team element where we really, I'm proud to say, cultivate like embedded trusted advisor relationships with a lot of our institutional partners to kind of work with them and handhold them through the process, help them address blockers internally or get internal, external stakeholder approvals and so on and so forth. And so I think through that process, we kind of help slot in regardless of where an institution is along their blockchain and digital asset journey. I mean, obviously, actually, both of you guys are pretty far along and pretty progressive in this space, but I think a lot of it is just like kind of us slotting into figuring out where we can be helpful. I think from an AvaLabs perspective, a lot of it is around helping to provide custom blockchain infrastructure to be able to facilitate a lot of these kind of custom and more regulated use cases, but it just depends in terms of what that looks like.
Did you have anything to add there, Nadine, from Citi's side?
Bit more about some of the key stakeholders in that proof of concept, but we had a combination of working with AvaLabs, Tokeny, DTCC, on Wellington, Wisdom Tree, and ABN AMRO as an underlying investor. And really, we brought together all of those stakeholders and our clients to look at how we can potentially issue a tokenized fund onto blockchains. So the proof of concept was designed to look at how we can operationally scale that, how we can work within certain legal frameworks to allow us to wrap the fund. And once we can wrap the fund in a common legal framework, then we can issue that. And so Citi act as the issuer of that fund token onto the wealth platform provided by Wisdom Tree. But how you could issue that on multiple different blockchains, but you could also allow fungibility between the fund token itself and the traditional underlying fund. So you could almost cash out of that fund token and back into the traditional asset, which I think is actually quite important to allow that fungibility between both. And I think that's a really important intermediary step into the tokenization of assets to allow that fungibility so you're not getting trapped liquidity on certain types of blockchains. But also the fund issuer can act as that agent to allow that transferability across multiple types of networks. So it was a really good partnership. I mean, a number of our clients want to work together on these type of fund distribution use cases. I think we're seeing a lot of interest around it. And it was really looking at ways that we can be able to do that and actually scale that and have some real commercial opportunity behind it.
Great, yeah. And from BNYMellon's perspective too, what was the original incentive for a bank like BNYMellon to get involved in this space, and how maybe has it evolved as you kind of, learn more and tread deeper here?
Yeah, so I think a couple things. First of all, for those who may not be familiar with BNYMellon, we custody around 50 trillion in assets. It's a lot of assets. We touch about 20% of the world's investable assets, so in some capacity, we probably touch some type of asset that even you as an individual hold. And our responsibility to our clients is that we're in the business of moving assets, storing assets, and keeping assets safe. That's a big responsibility when you're acting at that scale. And it also means that we have a really diverse set of clients who have a diverse set of needs. And what we were seeing in 2020, I would say it kind of hit a fulcrum point, which was that clients were coming to us saying that they were interested in these markets. And as custodian for around $50 trillion in assets, that meant that first and foremost, I think clients were looking to us for custody support. So that's why we led with custody, which we launched in October 22, 23. I've lost sense of time. And I think what that proved out that we weren't, no shade to the POCs, doing that in a POC type environment. We launched a production grade capability, which if anyone's worked at a bank, let alone a GSIB, that's not an easy feat. But what we did, and I think Morgan's point hit on it really well, is the team dynamics and the team that we built. So we brought together and hired people from the traditional space, from the digital asset space. We had strategic partnerships with a number of vendors, including Fireblocks and Chainalysis, two of the named ones. And we came together and said, okay, back to my point on we're stronger together. What can we do together to deliver the best product in the market for our clients? Right? We weren't doing it because it was fun. It was very hard. Also fun, but very hard. And we were doing it because for the last 240 years, it's our 240th anniversary. For the last 240 years since Alexander Hamilton founded the Bank of New York, we've shown up and delivered for our clients. And that's what we're doing now.
Yeah, and so curious kind of for all of you, it seems like you could tokenize almost anything, but I think the question is that a good idea? John, you made a face there. Maybe you could start on, just weighing the positives of tokenizing an asset, and maybe, some of the use cases for tokenization that might win out.
Sure.
Yeah.
So I think one of the reasons that it didn't really take off back in the day, not in that day, 2017, 2018 day.
Well, technically, everyone Google the Fugio coin. In some ways, that was the first tokenized asset.
The Fujio coin?
Fujio coin. Everybody look it up.
Never heard of that
You
one.
heard it here first.
But back in the first STO heyday, the quality of assets was one of the major issues. And there's this like idea of if you just because you polish a turd doesn't mean that it's not going to be a turd. Pretty much, right? So like just because you've tokenized it doesn't make a shitty asset not a shitty asset. And I think the quality of assets is super, super important. And that's something that, again, financial institutions, bigger Web 2 players are bringing to the table now that wasn't there before. From our perspective, being both the chain layer and on top of it a distribution application, right, primarily retail focused, we don't really care what asset it is, honestly. Whether it's real estate or art or fund interest, tokenized treasuries, which is like the hottest product in crypto, or one of the hottest products in crypto. Whatever it is, we don't really care. We just want to be, owning the protocol layer and then obviously be a distribution point. That being said, there's challenges with any asset that you would want to tokenize. Creating the token is frankly the easy part. The technology is really not challenging. I mean, there's elements to it, but really I think the key considerations is how do you translate real world rules and regulations, distribute compliantly, make sure that there's liquidity, and then obviously translate the real world value properly. And I think you also brought up a good point about the fungibility, Nadine. I would call it redemption, or the redeemability of it for the underlying thing itself, right? So all these things are challenges that are different on a case-by-case basis. So like, I was literally talking to someone who's in the airline leasing business this morning, and we're kind of talking about how it would be interesting to tokenize, some of these planes, but it's not something you're going to redeem, particularly at a retail level, right? But you might want to redeem a tokenized treasury for the actual underlying, or a tokenized Tesla share for the underlying share. So these considerations are significant, and the more in depth you get to some of them, and obviously this is based off of different jurisdictions as well, different case by case, it is challenging. So I don't think there's any one particular asset that we're like super, super bullish on. Like we're doing a lot of stuff with respect to real estate, and I think it's the most boring asset to tokenize, but there's a lot of it in the UAE where we're focusing on, and we have good connections within that space. So low-hanging fruit, and figure out ways to try to create an attractive product that when it comes to a distribution perspective, the retail's actually interested in it. That's an important thing. You need to be able to, from our side, get retail interested, and that means you either need to give yield, make it speculative enough, create some sort of, meme about it. I don't know, we'll see. Like seriously, we were thinking about, actually, one of the ideas that we had was legitimately airdropping a house, where we'd basically tokenize an apartment, fractionalize it, and then airdrop the entire thing on people, and then make a meme out of it.
Yikes.
Is that
Obviously, they need to all be KYC.
Of course, they are KYC'd, of course. But like, I mean, would you guys not like to get airdropped in a house? And particularly if it's like, yeah, there we go, right? Like, awesome, validated idea, perfect. We will do that. We will airdrop an apartment, I swear, promise.
I think the nuance there and the why is like, why are you doing what you're doing? Like, also, what does that mean? My dad's a real estate appraiser, so I'm team tokenizing real estate. But the question is like, why would you do that versus investing in a REIT or enabling access, right? I think what we're seeing is that tokenization enables the movement of value in a more seamless way, and not just for the memification of it, right? There, I think, are a lot of regulatory concerns with doing something like that. I'm not a lawyer.
We'll do it compliantly, I promise.
Yeah. But I think we think about the why, right? So if it's showing up for your clients, why do you want to enable something to move faster? If you think about funds, it's not the most efficient industry in terms of how funds are processed. There's a lot of opportunity there. When you think about movement of collateral, I started my career in collateral management, right? Being able to enable, you said U.S. Treasuries to be more mobile globally. I think there's a lot of questions there, and I think the space we're in right now, tokenization is the hot topic and the hot word, but I do think as an industry we need to show up and say, like, why are we doing what we're
100%.
doing? To what end?
100%.
right? And so with all that in mind, to what end, when you do a proof of concept like Citi did with AvaLabs, what is kind of the next step, and how do you kind of evaluate that proof of concept and figure out the plan of action going forward?
It's probably dependent on quite a few things, but we evaluated the operational efficiency that was gained with it, the distribution capability, the standardization with the security token, how you can integrate compliance into that token so that you can build that into the fund distribution itself. So I think that gave a lot of learnings, but now it's trying to move that to a commercial use case. So the next step is looking at what jurisdictions are favorable that have a good legal and regulatory framework around it, because you definitely need that to be able to unlock it. And if you look at Switzerland, for example, one of the leaders in that space, they have changed their securities law to recognize digital securities as a type of certificated security. They also recognize DLT-based platforms that are run by FMIs, but not necessarily, as long as they meet certain regulatory standards, to be equivalent to a traditional platform. So once you have that in place, then it enables the right framework to be able to issue tokenized assets in a legally compliant way. So analyzing the legal jurisdiction, I think, is really important, and then that the legal framework around that, say, fund wrapper, works in that legal framework. So that's really the next step. Take that to a commercial opportunity in the right jurisdiction on the right blockchain, and I think we're still assessing, which blockchains work, potentially starting with permission, moving that through to permission public. Can we do it on public? Is there going to be the right controls in place to allow that? I think the technology is starting to enable you to be able to permission tokens in a compliant way. Is there enough asset safety and security? Or do you need a separate register that is a golden source of truth apart from, say, a public blockchain where you can get better distribution and liquidity? So it's certainly trying to move it along that sort of chain to be able to issue those in a commercial way.
Got it. Yeah, and you touched on some of it there with the regulation and different jurisdictions, but kind of interested to hear from each of you what you kind of view as the main pain points and hurdles to overcome before asset tokenization really takes off. Because we are seeing these proofs of concepts and that sort of thing, but it's not fully here, as we know, or here at all. John, I was wondering if you wanted to kick off.
Like we need a whole separate panel for this.
Right.
The biggest pain point. I think still distribution, particularly on our level where it's obviously heavily retail focused, different than the rest of the panel, or most of the panel, I would say. Distribution is super important, and when you're dealing with retail, it's also a highly regulated space as well, and regulators are a little bit more gun shy about how you do that. So, finding assets that you can actually distribute effectively, and then bring liquidity to those assets. That's really, really important. I think there's an idea that DeFi incentives and AMN pools and these type of things will support that, and that's a thesis that we definitely abide by and are building into, but it's not a proven thesis, and it's something that's going to take time. I mean, our strategy is basically like we have the chain and then we have the app, and frankly, because we're being able to build in both sides, we can kind of take advantage of a bear market and a bull market. And the chain supports that, bull market opportunity and the hype and the FOMO and all the rest. Whereas the bear market's the time for building a pipeline for distribution, different assets. And frankly, I say this all the time, like you can't fork a license. Like in DeFi, you can fork anything and just, steal customers and, whatever. You can't fork a license. We've been working for over 2 years to get this license in Dubai, and we still don't have it, so I can tell you it takes a lot of time. They require 2 years of audits, and most crypto DeFi companies will never be able to do that. So this stuff, is an important thing, and that gives us the ability to kind of like survive the time when actually this distribution is there and this liquidity is there, because it's still not.
Yeah, I mean, I would echo that. I mean, I think when you're talking about tokenized like cash and cash equivalents, like money market funds, in the first instance, a lot of issuers are looking at kind of crypto natives from a distribution perspective. And so I think out of all the kind of real world assets out there, the money market funds are kind of the ones that are most ripe for adoption among more crypto natives. whether it's retail or institutional, from a tokenized alts perspective, so like private equity, credit, real estate, infrastructure. I think the distribution component is very key. In my mind, like the holy grail would be for an individual or an accredited investor to go on their Schwab app or their Fidelity app or work with Citi Private Bank or JP Morgan Private Bank and be able to access assets that historically they might not have had access to on a systematic basis with lower investment minimums, and it just so happens to be tokenized. Like tokenization in smart contracts is the thing that allows them to buy that thing, but they're buying it because they're interested in private credit or private equity, not because it's a token. So really kind of obfuscating that away and integrating with traditional distribution channels, I think is really important. It's obviously a much longer time to market, but I think that will be a huge unlock. And then in addition, I think something that you mentioned, Nadine, in terms of like jurisdictional differences in terms of what can be and what is considered like a natively issued asset and what is like the legal kind of recourse to that and the lack of standardization across all of that. I mean, in terms of the actual like adoption of a robust RWA market on chain, like technologically it's possible today, but regulatorily, you know, all these assets obviously most of them are securities, and so there are laws, rules, and regulations that govern them, but they're not uniform, and KYC standards aren't uniform. So all of that just makes it more difficult from a composability perspective as well.
Got it. And would you like that part of the panel down there? Would you like to add anything on just kind of some of the challenges that I know, Nadine, you kind of spoke about this in moving on from a proof of concept and some of the challenges there, but. Anything to add?
Yeah, no, I think a lot of it's hard. I think people underestimate the complexities of integrating with the traditional financial system. Like, I don't think we're going to wake up tomorrow and everyone's going to be in this world. You know, there's still a huge part of the population that doesn't know how to use online banking on their phone, right? So I think to Morgan's point, you want to make it as seamless as possible and as kind of obfuscated from the end investor, but making sure they get the benefits. But if you think about, as an example, like integration, let's say an institution was to tokenize a bond, enabling settlement using some form of digital cash is still a challenge there. So I think you can't underestimate how complicated that is, and I think a lot of the industry does. And I think if we had collectively a stronger appreciation for what that looks like, we would be able to get there faster.
I mean, we're upgrading legacy financial services infrastructure from like the 1970s,
Right.
So it's going to take a while.
And I'm curious too of what you would all consider major progress in this space to look like in the next few years, and how long you expect that it will take with all these challenges that you're naming.
I think having clear regulation in place, which we're starting to see in Europe, in the Middle East, in Asia, is a really important enabler for the financial institutions and clients. We know the boundaries, we know the guardrails. That's clear, and you don't have that level of regulatory risk. So I think that's really important to move it along. And I think you need the legal framework to support that, so you have legal certainty. So. When that tokenized asset lives on the blockchain, what does that actually mean, especially if you're tokenizing a real-world asset? So I think that definitely needs to be in place. I think we're seeing technology that can enable identity, compliance. We're seeing ways to permission data and movement of that asset. So I think that technology is coming into place. So I think a lot of things need to come together, but you know, as Talia said, these things take time, but I can certainly see it heading in the right direction.
Yeah, I'm curious if there's anything to add. I know obviously we've heard some of the biggest financial institutions and executives at those firms talk about the promise of tokenization being the future of financial markets. So curious if when we can expect, and really the timeline here.
Yeah, Talia, tell us.
I hate that question. I think we're going to see a lot of progress over the next 18 months. I think when will we declare victory as an industry? I think when we stop having panels called tokenization and actually start talking about what are we trying to do. I think that I'll declare victory then. But I do think what's the title of the panel? Seismic Shift. I do think that it is a big shift. I also think the more we can keep to the standards of, like, to your point, Nadine, asset safety, KYC, AML, et cetera, that we do in the traditional space, like, asset safety is asset safety, right? The objective is keep the assets safe. There are rules around that. It should match between digital assets and traditional assets. Digital assets, where appropriate, should have even, higher controls and standards around them where appropriate to protect end investors. But I don't think anyone has a crystal ball. But I do think even with the ETFs, right, we're seeing a huge amount of progress over the last couple of months, and I think we will see more over the next couple of years.
I have a little bit of an out-of-the-box worldview on this. I think in the next 3 years, we will build a platform where with one click from your mobile device, you can connect via your crypto wallet to your bank account, to your brokerage account, and seamlessly transfer all these assets on and off chain like you don't even know. And this will be a retail app on your phone that's accessible all over the world. I think that's in the next 24 months. And we're going to build it.
Great.
Luck.
And it'll drop a house, yeah.
I'll be excited if we can do that. That'll be fun.
Yeah.
Yeah, and because with crypto native firms working so closely with traditional finance now, is there still that tension that exists, or?
I mean, we're pretty friendly
Yeah,
on this
exactly.
panel. Maybe we can get a partnership with Citi.
Yeah.
To be clear,
If they want to explore the cosmos, we're down.
And I know you mentioned, nobody has a crystal ball, but just kind of, where do you kind of see asset tokenization in 5 or 10 years from now? Curious of just any ending thoughts on that as we kind of close out day 1 of JAS.
I definitely think we'll see tokenized digital assets in 5 to 10 years. I think sometimes we just underestimate the time that it takes to get there, particularly integrating the traditional financial markets, because there's so many factors that have to come in. But certainly the industry can see the operational efficiency alone in post-trade settlement. As soon as you get cash on chain and an asset on chain, you can swap those atomically for just even simply the issuance of a bond. There's still a lot of work in the pre-issuance phase, I think, that needs to be solved. I don't think we've figured out how to make that process actually more efficient when you're digitizing an asset. But certainly once it's issued on a blockchain, you can build in a lot of the corporate actions into that asset, and you can have automated asset servicing. So I've come from the post-trade world, and it's just, I think the infrastructure is absolutely a game changer. And then once you can get those assets digitized and you integrate that with DeFi, then that becomes a really interesting proposition, and I think it can take a lot of cost out of the system and just enable better efficiency for post-trade settlement. So I think that is driving a lot of the use cases, and on the flip side of that, with the, say, fund tokenization, it just enables better distribution and reach, and it solves a lot of problems with more complex assets like private market assets. It can make them more liquid, and I think some of the challenges we need to solve for is interoperability of various blockchains that I mentioned. I think we've got to solve the liquidity problem, because at the end of the day, if there's no liquidity, you've got a trapped asset, so it's not going to scale. But I think the industry is solving these, and you're seeing a lot of progress year on year, so I certainly think in 5 years' time we'll see many more assets digitized and issued onto various forms of blockchains.
Great. I think we'll end on that note. We have a cocktail gathering a few floors down, so join us for that. But really appreciate you guys for sticking around late in the day. Thanks to our panelists.